The Bitcoin Standard podcast brings you seminars from Saifedean.com, my independent online learning platform where you can take my online courses on the economics of Bitcoin and economics in the Austrian school tradition, join our 2 live weekly seminars, and read my books before they are published. Sign up now for access to the draft of my forthcoming economics textbook, Principles of Economics, and take 5 full online courses based on my books, The Bitcoin Standard, The Fiat Standard, and Principles of Economics. The Bitcoin Standard podcast is brought to you by Crowd Health. Crowd Health is the Bitcoiner's answer to fiat health insurance. If you listen to this show, you've probably heard me rail against the problems of modern healthcare and health insurance. Crowd Health is a brilliant new solution to this problem that leverages the power of Bitcoin to help people get affordable healthcare. Crowd Health holds its cash reserves in Bitcoin. It negotiates with healthcare providers on your behalf and gets you much better rates by offering to pay them cash, upfront, without having to go through the expensive bureaucracy of modern healthcare insurance. It's a solution that works better for healthcare providers and for patients by disintermediating large insurance companies who have the wrong incentives and are constantly raising costs. I'm very happy to have signed up for Crowd Health, and I'm really excited to support them as they disrupt the fiat health insurance industry. Go to joincrowdhealth.com and use the discount code SAIF, S-A-I-F, and you'll get the first 6 months for $99 only.
Coinbits. Coinbits is a great way to introduce your pre-coiner friends and family to Bitcoin. Get them set up in under a minute and help kickstart their journey by turning everyday spare change into Bitcoin. This Bitcoin-only app takes the uncertainty and fear out of Bitcoin saving by rounding up debit and credit card purchases to the nearest dollar, then using the difference to buy Bitcoin. Set it, forget it, and let the app automatically tax your high-time preference spending by saving the hardest money ever. Want to save in Bitcoin faster? Customers can multiply their roundups up to 10x or adjust their savings frequency for weekly or daily Bitcoin stacking. Coinbits is built on a sound, tried and true dollar cost averaging strategy that turns Bitcoin's volatility in your favor. Once you've gotten a private wallet set up, Coinbits encourages you to withdraw your Bitcoin to your own private wallet and embrace the Bitcoin Standard way of life. Start stacking on coinbitsapp.com and save your time and energy in the soundest money ever.
And regardless of who you work for and regardless of who is paying you. All thanks to a premium service I personally love and use, and that is Bitwage. Thanks to Bitwage, I receive my books royalties in Bitcoin. It is cheaper, faster, and easier. It is a true set it and forget it system, and Bitwage has been offering this premium service since 2014. Anyone can sign up and use it right away. No restrictions or limits, fully non-custodial. You can even split your incoming payment. Get part in Bitcoin and part to a bank account you specify. It could not be easier, and I cannot recommend Bitwage highly enough. Go to bitwage.com and sign up now and get paid in Bitcoin with your next payment or salary.
Have you been following the news of it's Argo, right? The miner out of Europe that are basically going to go bankrupt. And did I see a Core Scientific were in trouble as well?
Yep, Core Scientific are in trouble, and also Iris. We also hosted Iris just in today. Iris don't seem to be doing well.
Yeah, I mean, if we play this out in our minds, what do you see happening?
I think it's in the case of Core Scientific, I mean, they're still very profitable if they weren't in debt. Their problem was that they took on too much leverage. They're still mining 40 Bitcoins a day today. So their mines are churning out $800,000 worth of Bitcoin every day. So it's extremely profitable. They have a good operation, but they took on a lot of debt and expanded based on debt, and now they can't pay their debts, and so they're in trouble. I think Iris is a little bit like that. I haven't looked closely at Iris, but that's really the case, I think, with them as well. I mean, honestly, I think this is always the case, and it's just we always get fooled into thinking this time is different, but there's no way around it. Miners need to get wrecked in Bitcoin. If you're mining with wind or solar, you're going to get wrecked. If you're mining with credit, you're going to get wrecked. The only way that you can survive as a miner is if you're going to if you're going to have no debt to service and you haven't borrowed anything, and at the absolute peak, at the absolute bottom of the market, you need to be mining on nothing but 3 or 4 cents per kilowatt hour and have no debt service. This is it. 24/7 electricity at 3-4 cents per kilowatt hour and no debt. If you can do that, you can survive as a miner. If you can't do that, you're just not going to make it. Because if you take on debt, you are taking on debt. You're not going to get debt now. Nobody's lending to Bitcoin miners now because now they're all wrecked. You're not borrowing at a time when your expectations for profit are very low. The only time you're going to be getting good debt in Bitcoin mining is when the price is very high. At that point, you have unreasonable expectations and very bullish expectations about where the price is going to go. So I don't see it working out any other way. You have to just have very cheap electricity, because it all goes back to the difficulty adjustment, as far as I can tell. The difficulty adjustment just means you're only going to have the most efficient miners succeed. And I think, for next time, remind me of this, everybody. The moment that you hear about miners getting into massive debt and getting enormous amounts of financing, and the moment that you hear about miners talking about mining with renewables and green energy and solar and wind, red flag. One of two things is going to happen, but most likely both are going to happen. The price is going to crash. The difficulty is going to go up. That's it. If somebody out there can lend money to somebody who's saying we are going to mine with solar, Bitcoin price is too high, Bitcoin's difficulty is too low. There's going to be a crash. The price is going to drop, and there's going to be a difficulty adjustment. Because if somebody is out there lending to solar miners, a lot of idiots are out there lending for a lot of miners then, and the hash rate is going to go up. And if they're borrowing against this, then they're borrowing against coins that they're going to have to sell as soon as there's a correction. And their selling is going to exacerbate the correction. So there's going to be a big crash. So if we get to the point where the profitability of mining is where it was about a year ago, and the miners are just completely getting, very enthusiastic about, we're going to mine with green energy, and we're taking on debt, and we're expanding. Remember Matt Odell. Just stay humble and stack sats. And borrowing in order to mine on solar and wind is definitely not staying humble. You're going to get wrecked. I think there's just no way around it. It's this is what they don't get. I think it's a brutally competitive market in mining, and it is a zero-sum game. There's only 900 coins being handed out every day. And if more and more people invested mining, that's just going to raise the difficulty, and it's just going to... And I think the reason that it is inherently and inevitably self-correcting is the difficulty goes up. More miners come in. As long as there's profitability in mining, more miners are going to come in, and they're going to borrow against their future mining revenue. So borrowing against future mining revenue is just future selling pressure. I think this is the way to think of it. If you're borrowing today when Bitcoin is at, or let's say if you're borrowing last year when Bitcoin is at 50K, then you're just planning on selling next year. And so when a lot of miners are coming in, then that's a lot of people that are going to be selling next year, which is now, So people who are borrowing 1 year ago is a lot of selling pressure today, and a lot of extra hash rate that's going to come in today. So 1 year from now, there's going to be massive selling pressure, and there's going to be massive difficulty increase. And those two things are like two blades of a scissor cutting the miners. Because the more the difficulty goes up, the fewer coins you get, and the lower the price goes, the more coins you have to sell. So there's no way around it. And that's why I really think the best mining strategy is to let other people mine while you stack sats. It's just everybody I know that gets into mining gets wrecked. Everybody thinks they know better. Everybody thinks they have a connection. They knew this. And now, I get messages from people all the time. Hey, I've got 100 S19s, and I'm looking for a place to host them. And I've got thousands of machines, and I don't know what to do with them. And there's just no easy way around it. The only time it makes sense, like if you have to ask, if you are thinking of mining in general as an idea and looking around for places to mine and hardware to buy, mining is not for you. If you happen to have a power source, if you happen to have, a family that owns a giant piece of land that has a big river going through it, and you know that river can make electricity and you have no way of getting rid of that electricity, so then in that case, yeah, you can maybe get very cheap electricity. And if you can finance it without credit, then maybe you should do it. But all other conditions, if you live in a city and your only source of electricity is your local grid, and you're going to go around looking for electricity sources, you're going to get wrecked. If you're going to be borrowing from people to lend, to invest, you're going to get wrecked. I just don't see a way around it. I think you need to be thinking of it in terms of, you need to be doing your math based on the idea that I can get 3 cents per kilowatt hour electricity, which is extremely hard for anybody to get anywhere in the world. Very few people around the world are able to get that kind of rate. And it's mostly available in places that have built hydroelectric power generation capacity, but don't have high demand. So like the Pacific Northwest of the US, for instance, is one place where this happens. So if you have 3 cents per kilowatt hour electricity and you're able to finance it yourself with your own money, and I would also add that it's the money that you need in order to finance the operation is less than 10% of your Bitcoin stash, then go ahead and mine. Like if you're going to be mining with more than 10% of your Bitcoin stash, you're taking an extremely irresponsible risk, because almost certainly you would have been better off just buying Bitcoin. Almost certainly you would have been just better off buying, DCAing into Bitcoin. Making a lump sum purchase and then DCAing over the next year or so, it's almost certainly going to work out better, because you just buy the coins and you keep stacking. And if the price goes down, you get more coins. If the price goes up, your investment goes up. You don't have to worry about the difficulty. You don't have to worry about how many miners get in. And I mean, the best part about it really is that you benefit from the miners getting wrecked. Like right now, all of us who are able to stack at very low prices relatively compared to last year, we're doing that because of all the miners selling. The reason that the price today is 20,000 is because Core had to sell, 5,000 Bitcoin or something like that. And Argo and Iris and all of these companies have had to sell the vast majority of their Bitcoins. So they're all having to sell at the time when the market is crashing and the difficulty is rising. And it just keeps getting worse for them, and they keep getting wrecked and they keep selling. And all of the DCA army, you don't have to worry about electricity. You don't have to worry about securing your mining equipment. You don't have to worry about any of that stuff. You're just stacking there. So this is where you want to be. If you take anything that I say and think, well, yeah, maybe I should be getting in, then probably you're not getting in. Like, no, you just not be getting into mining at all. I think, like with gold, like mining Bitcoin is just made to wreck the miners. That's just how it is. Like mining gold. I remember reading Ibn Khaldun. He said that gold prospecting is the least respectable profession, only second to taking people as ransom to taking people hostage for ransom. So he said that the most despicable profession is kidnapping for ransom. The second most despicable profession is gold mining, gold prospecting. Why? Because you're just basically gambling. You're going out there digging holes in order to make new coins, in order to find gold, which is not adding value to anybody in the real world. Other people, in order to make gold, what do? They wake up in the morning and they serve others. You cook, you grow food, you build houses, you do things of value to others, and they give you some of their gold. And then if you're an antisocial person, you go and you kidnap somebody, and then you only return them to their family if the family pays you a ransom. Or you just go and dig in nature and find gold, and then you just get that money without producing anything of value. And so the reason that gold works as money is because it wrecks the miners. It's because miners go out there and prospect and spend hours and days and years digging, and usually it's not worth it. Usually they end up getting wrecked. Usually they would have been better off teaching math, building homes, growing crops, and selling them to people, and then stacking the gold that they get. This is a much better way of mining gold. You just do something productive for society and you get money out of it. And so and I discussed this in the Bitcoin Standard, like that's why mining gold is bad. And that's why gold is good money. Because if it was profitable to mine gold, then you're going to have everybody mining gold all the time instead of working and being productive. Basically what we have with the fiat system. That's why the fiat money is so terrible, because you look around you today, and for every person out there doing a productive job, there's another person probably doing a parasitic job that lives off fiat. All of fiat world, all of fiat clown world is people who don't produce things of value, but they've found a way to position themselves close to the money printer. Because the money printer is so prolific, because the money handed out is so much money, because every year we're increasing the money supply by 7, 8, 10% or so, just in the best currencies, but on average it's like 14% probably for overall. I guess you could argue 14% of global workforce is parasitic. It's just out there getting the money inflation. And so that's why it's a bad money, because we have 14% of society that are being parasites on the 86% of us that are productive. 14% of society are out there not producing anything, but they're mining fiat, basically. They're jumping through hoops in order to justify getting some of the new money. These people could be in finance, they could be in all of the government-connected companies, they're government bureaucrats. Everybody who's getting money without serving society is basically a burden on society. And so that's why it's a bad money. And that's also the case with Bitcoin. Like, if everybody is mining Bitcoin, Bitcoin is crappy money. People need to be earning Bitcoin. People need to be working hard to produce things of value, and then to store the excess value that they save, that they don't consume, store that value in Bitcoin. That's what would make it a good money. So the wrecking of miners will have to continue, I believe. It's just always going to be that case. That's what the difficulty adjustment ensures. We're, with gold, we only had 1.5 or 2% increase in the gold supply every year. With Bitcoin, we're getting an even smaller increase. And so we're going to inevitably have to have a very small number of people mining profitably. It has to be tiny. And it's, I think, going to get probably more small scale and more decentralized. Like the notion of very big miners controlling so much of the hash rate is not sustainable, because it's not very possible to get large amounts of energy at a certain place at a very low cost. It's not easy to mobilize the capital for that without borrowing, which is going to be extremely reckless and will get you wrecked when the difficulty goes up. And it's not easy from a thermodynamic perspective. There are no easy places where you can just go and connect 1% of the Bitcoin hash rate or 5% of the Bitcoin hash rate and get electricity at 2 cents per kilowatt hour. It's going to be a very, very big, diverse patchwork of tiny places where, this tiny little river here has a few miners connected, and that tiny river there, and a few nuclear plants will have some excess capacity here and there, and grids that have built excess capacity might be willing to sell some excess at a very low rate here and there, but I think the centralization of mining is just is not very feasible from a purely economic perspective. The bigger they are, the harder they fall. The bigger it is, the bigger the operation is, you can only get bigger by getting into more expensive power or getting into debt. And both of those things are going to get wrecked with difficulty adjustment. So,
sorry, Saif.
yeah.
I mean, that's a great thing, right? More decentralization, and there's a big community of people out there. Max on the Bit by Bit pod just did a whole month of pleb mining, he called it, and it's so interesting listening to just individuals just with one machine in their home, and they're not running it all day. They're running it to heat the water for their shower when they need it, or running it in the winter, especially if you're on electric anyway for your heat. If you can just run it for a couple of hours a day to get that heat that you need it when you need it, that's feasible then. You know, if you're going to be spending the money anyway on the electricity to heat your home, you may as well spend it to run a miner. Doesn't have to be for 24/7. And this is what's really interesting with all these big companies going belly up. So many machines are going to be coming onto the market that it could really kind of rejuvenate a pleb movement, a grassroots movement to have solo miners plugged in at your home, but not 24/7. You know, it doesn't need to be. If we play that out in a couple of years' time, it could be very interesting.
Yeah, I think there is a case for that. I think I'm still not entirely sold on whether this is actually sustainable and profitable. I think there is the value of getting KYC free coins, yes, and that is probably the value that allows people to get into this and not be too concerned about whether they're making a profit or not. But overall, I doubt, even if you're using it for the heat, I doubt it's going to be better than just buying the Satoshis up front. It obviously it depends on the time that you buy. But whether it's economical or not, I don't think so. But yeah, I think it's just going to become more and more significant because more and more people are going to be doing it anyway, whether it is economical or not. And I think, remember we had Ben, I think, from, I forget the name. It's some Canadian mining company. I forget the name. We had them on the podcast a year and a half or so ago. And he said he thinks mining can operate at Bitfarms. I think he's from Bitfarms. And he thinks mining can operate at two scales. Either it's either they are, either the small miner where you have one or two machines in your house and you're able to run it, or the very big miners. But the middle of the road kind of side gig in a small warehouse is what's really going to struggle to compete. I think perhaps the last few weeks are making us revisit that. I think we're seeing the big scale miners are getting wrecked. A lot of them are, at least. And the small scale is going to be maybe sustainable. Maybe the middle scale might become more and more sustainable over time. But I think it's just going to be very cutthroat. I don't think there's very easy formulas for what scale or size is going to be successful. I just think cheap electricity is the key thing. You need to just have a lot of cheap electricity. And that's just not an easy thing to get because it's not very widely available. If you have an easy way of getting 2-3 cents per kilowatt hour electricity, you're probably not getting a lot of it. It's just not easy to make that. It's expensive to make electricity in general. It's more expensive. The average electricity cost worldwide, and this is based on 2020 numbers or 2019 numbers, so before the recent craziness, it was about 14 cents per kilowatt hour. And that's the average cost that people pay for electricity worldwide. So if you're paying anything close to 10 cents per kilowatt hour, you're just not going to make it through the bear market. And if you don't make it through the bear market, It's not just that you've lost some money for a few months, but your operation is profitable for the rest of the time. You're profitable in dollar terms. You'll still be profitable in dollar terms, but in order to be profitable in Bitcoin terms, in other words, in order for your mining investment to beat just stacking sats, you will need to be profitable likely throughout the whole period. You need to be profitable through the depths of the market. And if you have to sell some of your mined coins during the market, you're just not going to make it, I think. And also, I think that the other thing about small scale electricity is that electricity costs can very easily rise. So you think that right now you're getting, you're getting your electricity at home for 7 cents per kilowatt hour, 6 cents per kilowatt hour. But, because we're in a climate crisis, it's entirely feasible that you could get rates jacked. Your utility company is going to say, sorry, we can't give you 7 cents. We'll give you 9, 10, 12, 15. And that's what's happening to a lot of people around the world right now. Marquita, you're saying you were mining. Were you mining at home with like your own machine, or were you hosting somewhere else?
Yeah, sorry. It's nap time. Yeah, so I paid a host to mine for us, but that was last year. We were making money. But it's like you said, it's rough, and it hasn't been profitable. So I've just been stacking lately. But it's about difficulty. It's about energy cost. It's everything. It was like a profit share group, and I was trying everything last year. I was so excited. But yeah, I've unplugged since. I'm just stacking because it's better for me this year.
Would it have been better if you were stacking from the beginning?
So
I started.
I guess I didn't look into it that much, but I started stacking, and that was good. And then I got into mining, like right in the summer, where miners were earning. I think it was like when the price dropped. I think it was the difficulty went down, or it was something in the dynamics where mining became like 1.5 times more profitable. And it was just that good, lucky summer, and I earned so much more.
After the China ban.
Yeah, the China ban, right. I'm not super technical. I understand what you guys say, but I can't regurgitate it. But whatever, happened, I got really lucky, and I earned more than what I invested. Just put that way. Like I easily doubled than if I had just bought, put in 15K buying. I was able to double that. What was it? Maybe triple. I trebled it. But it was just timing. Like if I done it like after the summer, I would have got totally wrecked. And so we unplugged in November, and I just started stacking because the price plunged. It got a little crazy, as we all know. But yeah.
Generally, I'm still quite glad that I've never gotten into mining. I've never put in Satoshis into mining. I mean, I do have a small stake at Upstream Data, very small stake, and I'm an advisor there. But it's that's more than just a mining business. They do have, they build mining hardware, but overall, I don't think mining is a very.
Yeah, I agree. I agree 100% with you, Saifedean. Again, you don't want to play these kinds of games with luck. And I was trying to, a bunch of different things, and I just tend to learn by experience and being real hands-on and pretty intense that way. But I took a big risk, not realizing that it was a risk, right? So it's not something that I would ever advise anyone else to do. It's just I had it to do it, and had I don't want to say play money, but that's what it was. And then we got lucky. But I knew why to get out, whereas maybe a lot of other partners didn't understand like why they needed to get out. And everybody acted in their own, for whatever they needed to do. But I knew it was time to go based on my knowledge of what I've learned here. So it's just unfortunate because a lot of folks don't get it. But I know why I was lucky, and I don't want to take that risk again. So I'm agreeing with you, but I'm also sharing like it just so happened to work out. Maybe beginner's luck, right? It's my first year learning all this stuff, but I wouldn't recommend it. It's way too complicated.
Yeah, I'm one of the Twitter old timers, Mr. Huddle. A highly recommended follow. This guy is like one of the first people that I followed on Bitcoin Twitter when I was when I got into Bitcoin, and he's just been there. I've met him once. He's just been there. He's just been repeating the same tweet basically. For the same 10 tweets, he just keeps repeating them, and the world around him, the world of mining and crypto and shitcoins, it just keeps making the same mistakes, and he just keeps repeating the same mantras over and over again, and they just get more and more profound. And one of his things he always says, he learned it. He says, like miners have to learn by getting wrecked, and he himself got wrecked. He started mining, he says, I think in 2012 or 2013 or something like that. He started mining pretty early, and he made dollars. Yeah, he made money in dollar terms. Like he got more dollars out of mining than he put in. But he learned a very expensive lesson, because if he had just bought Bitcoin with his coins rather than trying to mine, he would have had a lot more Satoshis. And so it's funny, because that was the lesson that he learned in 2012, in the bear market of 2012. And he learned, and then we got people learning this lesson again in 2014 and 15. And then we had people learning this lesson again in 2018 and 19. And now we're getting a whole new generation. Each time the difficulty is up 10x, Bitcoin's up around 10x. And the number of people that are learning the lesson is up 10x. And the amount of money burned in the lesson is up 10x. And Mr. Hoddle's just there saying everybody needs to get their rectucation, as he calls it. Yeah, you're going to have to get wrecked to learn. There's no education quite like rectucation. So, we can look forward to this repeating at a much larger scale in 2026 with the next bear market. And miners are going to be 10 times larger. The difficulty is going to be 10 times larger. We're going to have probably nation states mining and sovereign default crises because the difficulty goes up. We're going to maybe have, credit ratings for sovereigns going up, going down, sovereigns defaulting with the difficulty. Credit markets will be following the Bitcoin difficulty adjustment to assess how this government is going to be able to pay back its loans to mine or not. Everybody is going to have to learn the hard way. I think a lot of people only learn the hard way. I'm quite happy with the fact that I had to learn this lesson the easy way, because I was blessed in a sense by having spent my early Bitcoin years in a place with no electricity, where mining was completely not an option. Like we had just such terrible electricity that it never occurred to me that I should be mining. And so that probably saved me a lot of heartache.
Yeah, it's those technicals. Folks just don't. It's really difficult to explain the technicals of mining and how one could be profitable in an easy way, so that folks can really analyze whether or not they're in a position to take advantage of mining.
Yeah,
I think I understand it when I hear it. I understand it more now that I've gone through it, and then and now I'm looking back. And only because you're explaining it, right? Like I can't, I guess I could, but I'm not coming up with this stuff by myself. So how in the world do we share that? I have no idea how to share that so folks can get it practically.
Yeah. I think, the really sad thing is I know some people who have considered mining, who would consider mining, but wouldn't consider buying. And for them, it's just they completely miss the value proposition when they think, oh, okay, well, Bitcoin, all right, hard money. Well, how can we mine it? No, you don't need to mine it. Just buy it. If you have money to mine, you have money to buy. Just buy the Bitcoin and hold on to it. And I know people who have just not bought Bitcoin because they don't accept the idea that you can just buy it. Like, no, if you buy it on the market, like you've missed out on the money-making opportunity. You've missed out on the profit. In a sense, like they think of it as some kind of product where If you just go out there and buy it from the supermarket, yeah, you buy it as a consumer product, but there's no money to be made from buying TVs from supermarkets. You want to make money in TVs, you go and you produce TVs. So how do we get into the TV business? And I mean, it's almost an admirable entrepreneurial spirit where you see, all right, well, TVs are going to be the next big thing. How do I get into TV making? Computers are going to be the next big thing. How do I make computers? It's a great entrepreneurial way of looking at the world, but it completely doesn't apply to Bitcoin mining. You're much better off just buying the Bitcoin. And if you have to start thinking about mining from the perspective of, okay, I want to mine. Now let me see, where can I find the right machines and where can I find electricity to hook up to? You're not going to make it, almost certainly. And I think the only time it's going to make sense is if you come at the problem with the electricity. If you have a gigantic source of electricity that is very cheap and you can use that electricity to make more, to mine Bitcoin. If you come at it from that perspective, it might make sense for you. Or if you're an electricity producer, exactly. Yeah, if you're an electricity producer, it makes sense for you. You have to have the surplus of energy itself and have no way to go along with that, nothing to do with that energy. And you want to mine only with the capacity that you can guarantee is available for you 24/7. All of this nonsense about we switch off the miners and we turn them on and off depending on demand and this and this and that, you're just asking to get wrecked. You need to have your miners running 24/7 because you're paying. So on the one hand, you need cheap electricity. On the other hand, you need cheap mining equipment, and you need to make use of your mining equipment. If you're turning off your mining equipment, you're not going to make it because your mining equipment is depreciating every second. It's collecting dust. It's getting older and the difficulty is rising. And if you have to switch off your miners, you're just not going to make it next to the miners that are not having to switch off. So you're up against people who are running 24/7. You have to consider right now, look at how enormous the hash rate is. Look at how much the price has crashed and look at how much the difficulty has gone up. The difficulty has tripled in the last year and a half or so. It's just insane. Over the last few weeks, we had an enormous increase in difficulty. So the difficulty is very high. The hash rate is very high. That means a lot of people are plugged in and the price is still crashing. So there are people out there that are still profitable at these insane difficulty levels, at this very high hash rate, at this very low price. Those are your competition. You need to be up there competing with them. They're running their machines 24/7 and they're getting cheap enough electricity that they're able to operate this. Those people aren't out there. Those people are minting Bitcoin at a very low rate and they're not out there advertising it. And so you need to run the numbers, I think, based on this. You need to think of what you have right now, look at the cost of your electricity, and look at the current state of the network today. It might even get worse over the next few months, but I think today is a good day to run this. If you had your operation running, calculate all of the costs of operation that you have, calculate all the cost of electricity, look at the current hash rate and the current difficulty, and look at the current Bitcoin price. Are you able to make a 20% profit on the current network state? If the answer is no, then you shouldn't be mining. And this, I think, even 2 years from now, let's say in 2 years from now, the price goes up and the difficulty doesn't go up quite as much and its mining becomes very profitable and we're back to the mania and we have a lot of people investing in mining again. If we get to that kind of world again, you're going to be tempted to run your numbers based on the Bitcoin price then and the Bitcoin difficulty then, and it's going to make a lot of people look like they can mine profitably. And my advice is no, go back to November 2022. Look at the price and the difficulty at November 2022 and see if you can mine profitably then. And it might even get worse. We might, maybe February 2023 is going to be even worse than now. So it might get worse, but this is a good time to try and measure your profitability. Marquita's asking, was Endorsi working on decentralizing home mining with a program? What is your take on that? I don't know. I think the difficulty adjustment is working on decentralizing mining, and it's doing a splendid job. It's destroying the biggest miners, and it's forcing these companies to get smaller and get leaner, and it's forcing them to sell their coins to more buyers. I think another aspect of the decentralization, which you mentioned in an earlier seminar, is that now the big miners are either going bankrupt, or if they are surviving, they are in no position to be making acquisitions. So the other big miners aren't going to be buying up Core or Argo or Iris, because they are barely able to make their own bills right now, and nobody wants to invest in this business right now. Nobody wants to lend to this business right now. So if we do get, obviously I think there's still profitable operations. Many of these got wrecked because they took on debt. They didn't get wrecked because they are not profitable. They're still mining more Bitcoin than they are paying in terms of running cost, or in other words, the dollar value of their Bitcoin is higher than the dollar value of their operating cost. So these are still profitable businesses. It's just that they have the debt that is making them unprofitable. So these can, these can get sold out, and they can be the debt can be exchanged for equity. People will buy the debt. People will buy the equity. But I think it's going to be a lot more decentralized. So more, they'll likely be broken up into smaller operational units. I'm not so sure about this. I'm not so sure about this kind of ideological decentralization as a service mining. The idea that we're going to sell these miners so that we make it profitable for people to mine profitably at home. In general, businesses that function with a kind of a consideration other than the bottom line can't compete with businesses that compete on the bottom line, and that are focused on the bottom line. In other words, if you do want to run a decentralized miner, your best bet is to just go out there and buy the best miner on the market. I'm not so sure that this kind of social justice mining of we need this to be decentralized, so we're going to design these miners to optimize for decentralization, is going to compete with the ruthless engineers who are out there just trying to make the best miner so that they can make money. You know what I mean?
Yeah, Bitcoin can't be socialist.
I'm sorry?
Maybe that was hard. Maybe I said Bitcoin can't be socialist, or we can't mix in socialism.
Yeah.
That might have been harsh, but
yeah, it's just it has to be out there competing with the it has to be out there competing out there with other mining makers. And this idea that you can design something optimized for decentralization, I'm not so sure you can optimize more than just what the difficulty adjustment already does.
Safe, what about the intrinsic value of non-KYC? In other words, if you look 10 years, 20 years ahead, and KYC becomes a huge issue, and the value increases, does it somehow make sense today, given that potential future of the value of non-KYC?
Yeah, I think this is another thing. Like, yeah, we were mentioning it earlier. I think a lot of the home mining is arguably not profitable in SATS terms. In other words, you would have been better off just stacking SATs instead of spending money on electricity and equipment. But for many people, there is that value of not having to give your data to an exchange and not having to get, not having to have those Satoshis forever linked with your name on the blockchain. I think a lot of people Think of it like that. And that's likely going to continue to make higher demand for decentralized mining. And that, incidentally, helps make mining less and less profitable for everybody else. Something to keep in mind, when you remember, how is all of this hash rate online now, given that the difficulty is so high and the price is so low relatively, and that it's not very profitable? Well, because there's a significant amount of that hash rate that's on the network right now that's not even interested in making a profit. And they're out there just interested in making KYC-free sats. So that's even more reason why mining becomes decentralized and why big-scale mining is not very likely and profitable in the long run. Because you're competing with people that are in it regardless of the profit. All right. I guess that's probably enough for today. So see you guys tomorrow.